Okay, so where were we? We were here. This is the BMS. This is the order block. This one. This is the new lower low. But then here there was no return to order block. There was now a BMS. Market structure is more important than BMS than order blocks. Market structure is more important than order blocks. Then they broke market structure here. So there was no return to order block. So now we have a type 1 reversal. Once we have this BMS, this is the new order block, this one. Okay, let me clear this. This is our new order block, this one. Okay, and you see this line here, this one. This is the monthly order block that I showed you last time. That's the monthly order block. This one here, this one. That's the monthly order block. So it's this line here, this one. So now on the weekly, we have a higher high and a higher low. Okay, return to this order block. Then price goes up. This is the BMS, this one. The moment you see this BMS, mark the order block. This is our bullish order block here. Okay, no, it's supposed to be with the wick. Okay, with the wick, yeah. And this is the BMS. So now you mark your order block. Price goes up, makes a new higher high. You wait for price to come back to the order block. Price comes back to make a higher low. Then we buy. That's our return to order block. You buy here. Price goes up and breaks this market structure. Once they break the structure, you mark the new order block. The new bullish order block, which is the last bearish candle, is this one here. This one. Price goes up, makes a new higher high. Price comes down, higher low. Where is the higher low? On the order block. They come to pick orders. So this is our higher low, also RTO. Price breaks market structure. Where's the new order block? It's this one. Price goes up, makes a new higher high. But then price, this time price did not come back to discount. They did not come back to the order block. They came back. What is it? Yeah, but I'll teach you this one later on. I'll teach you later in lesson. Which lesson is it? Lesson 4, I think. Yeah. Right. So this is the uptrend. This is another example. Higher high, higher low, BMS. The moment you see the BMS, mark the order block. Now, sometimes the order block is 2 candles or 3 candles. Let me show you how. Where is my paint? Now let's say you have candles like this. So you have candles like this. So let's say this is a bullish order block. And this is the wick. And this is also the wick. So now if you look closely here, these 2 candles are equal. Because a candle is a body and the wick. This wick is at the high of this candle. This wick is also at the low of this order. So this becomes our order block. This is the order block. All of this, these 2, that's the order block. So whenever you have 2 candles that are equal or 3, you pick all of them. That's your order block. So that is why on this example here, if you look on this example, that's why we picked these two candles here. These 2 candles here, these ones, because they are equal. The wick of this candle is right below here. That's why we picked them. Right, anyway, then BMS, higher high, higher low, you buy here. There's no there was now a range. No new high, no new low. Then they broke structure here. This is the BMS. The moment you see the BMS, mark the order block is this one. You mark it, price goes up, makes a new higher high, comes back down, higher low, RTO, you buy. Price goes up, break structure here, this is the new order block. So later when price comes back here, we are going to buy. Then price goes up. Anything? No, that's one. Okay. The order blocks can be used once. The return to order block can be once, twice, or 3 times, but it's more common with this. If some of you know about this, the volatility indices, the derivative, right? These ones, it's not the institutions that are controlling the market. Okay, it's not people. It's a computer that is just mimicking the forex market. Okay, so these guys they created a computer that can that copies what forex does. That's what they did. So this is not controlled by any institutions, companies, what. It's just a computer. So sometimes with these guys, the order block can be used 5 times. So like this is the order block here. First return to order block, second return, third return, fourth return, fifth return of the same order block. But in forex, this does not happen. This one doesn't happen. In forex, in currencies, you get either 2 return to order blocks, or maximum 3. But still the same thing. Order block, return to order block. Order block, return to order block. Order block, return to order block here. Order block here, this is the return. This is the order block, this is the return. This is the order block, this is the return. Order block, this is the return. Order block again, this is the return. Order block, this is the return. So as you can see, it's all about picking orders. They're coming back to pick orders into the market. Yeah, I think we're done with this part now. I'll send you guys this later. I'll send you later. But as you can see here, yeah, let me just use this example. Break market structure. This is the order block. Higher high, price comes back right here. That's your higher low. Where's the higher low? Right on this order block. Price goes up, breaks market structure. You mark the order block before BMS. Is this one. Price goes up, makes a new higher high, comes back. There's a return to order block. Another one is here. This was a type 2 reversal here. Type 2. This is the BMS. This is the order block. Price comes back to the order block to make a return to order block. You sell. Where's the other example? Also this one. Yeah. Very clear. Lower low. This is the lower high. Last lower high. This is the BMS. Where's the last order block? Is this one. This green candle. Price comes back right here. There's the return to order block. You can sell here. That's all. I showed you guys this. Another example. Oh, this will be the last example. Lower low, lower high. BMS, last order block, return to order block. Lower low, this is the last order block, return to order block. Type 1 reversal here. Lower low, return to order block. Lower low, return to order block. So we use order blocks, but the order blocks, as you can see, they are clear when you know your market structure. If you know your market structure, they're going to be easy to see. Right, let me go to the chart.
I have one question, sorry. So on the left side, on the last order block, right?
Which one?
The two, on the first one, the last order block on the left side.
This one?
Yeah, the 2 green candles. They are not really the same size, but why is still last order block? Or I just take 1 till 2 candles.
Let me see. Okay, wait. Okay, I think I made a mistake here. Right. This is the last order block. This candle here, this one that you see here, That's the, okay, I'll teach you guys in the next lesson. That's what is it? That's a mitigation block. That's a mitigation order block, but I'll teach you in the next lesson.
Okay, good.
Yeah.
Okay, thank you.
What for a block? I don't hear it. Acoustic.
Oh, sorry?
How do you call this order block? I don't understand
I said
it.
I'll teach you in the next lesson.
Okay.
Mm. Right now we are just on the order blocks only. The next lesson is advanced order blocks. So you need to know this one first before we go to the advanced order blocks. Right. So now we are back here. Last time we did this chart, right? This is the chart that we did. This one. I'll just give you a small brief example here. This is the BMS, right? This was our last high. This is our new low. Fibonacci, high, low. So now, as you can see here, this is the BMS right here. Where is the last order block before BMS? Is this one. What did I say? If the order block is in discount, we don't pick it. We want the one in premium. So that now here that we are in a downtrend, we want the order blocks in premium. Now here in premium, where's the order block? We have this one big order block here, this one. With a one big order block, that one. So that's our order block. This one, we don't even use it. This is the order block. So now what you must also do now, when you mark your order block, right? You need to look inside here, this order block. If on the lower time frame, there are order blocks that are still fresh, that have no return to order blocks. Order blocks without RTO. That's how you start to confluence your order blocks. Okay, so now this is the order block. Let's look in this area here. Let's go to 4 hour. Do we have any fresh order blocks? It has to be a fresh. What is fresh order block? An order block which had no return to order block. That's a fresh order block. So here, this one is a fresh order block here. This one. This one, there's no return yet. This one here. There's no return. So in the future, I'll be looking for price to come back here. This also order block here, there was no return. But okay, but let's go to our market structure. Market structure is important. Higher high, higher low, no higher high, BMS. Lower low, where's the last order block before BMS? It was this one here. This one. But let me use the MT4. This is the last order block. And it has no return to order block. It's a fresh order block. So most of our order block has to be fresh. For your order block to work, it has to be fresh. There should be no return that happened. This is the BMS. There was no return here. Then price came down. So now you can start to confluence your order block. So now this is the big order block. Okay, actually, let me do this. Let me do this. Where is the equilibrium? So for the equilibrium, use the body. Don't use the wick. Use the bodies. Do not use the wicks. Use the body. Right. This is our equilibrium. Right. So we have this order block here. So price comes back. As you can see, well, let's go to 1 hour also. 1 hour, do we also have another fresh order block? Right. Same order block, same fresh order block. On 1 hour, this order block is also fresh. There is no return. There is no return on this order block. So this is a 4 hour and 1 hour fresh order block. This order block here is not fresh. Why? Because this candle came back to the order block. Look, this order block here, this was this first return. So it's no longer fresh. So now all our most of our confluence are here. Daily order block, 4 hour order block, 1 hour order block. That's where the confluence is. Even this one was also another order block, but it was violated here. They did not use it. So they were going for that one. So now let's go to the lower time frame now and look at our market structure. Like I told you last time, higher high, higher low, higher high. Then there was a range. Then this is the BMS, higher high, higher low. Then BMS, higher high, higher low, higher high, higher low. BMS, where was the higher high? Right on the order block, on that old order block. This is the BMS. And this is our previous higher low. So higher high, higher low, the new higher high is on the order block, a return to order block. So this could have been your first sell. This is an aggressive sell though, to be honest. It's an aggressive sell because price is not bearish yet. But if you want a safe entry, wait for the BMS first. For the market structure BMS. Higher high, higher low, no higher high, BMS. So our new range, like I showed you last time, is this high. The new range was this high and this new low here. After this BMS, where was the last order block? It was this one. Actually, it's two candles. As you can see, they're equal. These two candles are equal. That's the order block. So as you can see, price came down with the lower low. Where was the lower high? Right on the order block. Right on the order block. That's the lower, that's where the lower high was. So this could have been your aggressive entry, in a very, very aggressive entry though, to be honest. But if you wanted a safe entry, wait for the BMS. And this would have been your safe entry. That's the safe entry here. Now, inside here, we have a minor structure. We had a minor structure here. I would use the different color. There was a lower low, there was a lower high, there was a BMS. Where is the last order block? Is these two candles here. As you can see, lower low, lower high, right on the order block. Then BMS. After this BMS, the last order block is this one. Then, okay, now we are back to the major structure. Yeah, you can change the color now. I can change the color. Then lower low, but this lower high was not on the order block. Just like I said, sometimes there's no return to order block. There's a return. This was a return to, what is this? The mitigate. Okay, that's for the next lesson. I don't want to confuse you right now. Right. Then lower low, lower high, BMS. The moment you see the BMS, mark the order block first. Where's the last order block? This one. This is your order block before BMS. This green candle here, that's the order block before BMS. Then now you can look for your lower low. Lower low, great, there we go. Lower high, return to order block. You sell. BMS, once you see the BMS, mark the order block. Where's the order block? It's this one. This green candle here. Then we go back to our market structure. Lower low, there we go. Lower high, return to order block again. This is how powerful order blocks are. And then now there was no clear setup here, but I think this was a return to order block here. Yeah, it was a return, this one. This order block. What about this one? Well, also a return with the wick, another return to order block. Let's look for another one. This is the BMS. The last order block is this one. There was no, oh, almost, yeah, almost. Almost, yeah. Didn't touch it though. Lower low, lower high, lower low, BMS. Where's the BMS? This is the BMS. Where's the last order block? Let me see. Did they use it? Did they come back? Almost, yeah, they almost touched it. But they were using, I think, yeah, for here, I think they were using this bigger order block. This one here, that's the one they were using. Because this order block here is inside the bigger one. So I think they were using the bigger one here. Even here, let me see. Yeah, same thing here. Higher high, higher low, higher high, BMS, lower low, lower high, return to order block. That's how we use order blocks. Same thing here. Now that we have another another daily BMS here with a new lower low. Our new range is this high and this low. Now it's a mess. So here, back to this range. This is our high. This is our low. This is the order block. The one in premium. We look for the one in premium is this one. Another big order block again. This one. This one are two return to order blocks. First return, second return. So let's see. When price came back to the order block, what happened on the lower time frame? What happened on the lower time frame? Right here. Higher high, higher low, higher high, no higher low, no higher high. We have a range. If you use your trend line, no higher high, no higher low. Then they broke market structure here. This is the low that broke market structure. So when they break structure here, they have a new higher high. Price comes down. There was no higher low. There was a BMS. So just like I said, this is the order block before BMS here, but it's not in premium. If you take this high and this new low, this order block is in discount. We want the one in premium because in a downtrend, we want to sell in premium. So in premium, we have to look for the order block in premium. Where is the order block in premium? Is this one. That's the order block in premium. Now we can delete this one. So now this is a new lower low now. Where was the lower high? Right in the order block. As you can see here. I think it was actually almost at the equilibrium of the order block. Yeah. Remember, for the equilibrium, you use the bodies. Don't use the wick. Use the body. You can bring the this highlight to the body. Once you are done marking the equilibrium, then you can put it back at the wick. This was the lower high on the order block. And then
how do you measure the equilibrium per your eyes? So that's it, or you measure this with a ruler tool?
You can use the Fibonacci, or you can use this. Do you see this here?
What's this?
If you do this, you see this box here?
Yes.
That's the equilibrium.
Okay.
Yeah. So you can use that, or you can use the Fibonacci. And then this was the BMS. This is the order block, but there was no return. Just like sometimes there's no return. There is no return to order block here. There's no return sometimes. And then new lower low. This is the BMS here. Our last order block is this one. And as you can see here, there was the lower high. There was your setup. Price comes down, makes a new lower low. If you put a trend line here, all of this was nothing, was just distracting, was not a BMS. Price was playing around in discount. Like I told you last time, sometimes price will make a lower low, lower high, lower low, then plays around in discount. Then later on, lower high, then price comes down. That's what they did here. So this is the lower high. And then and also the return to order block. Then you sell here. That's where you sell. But after this BMS, this becomes our lower high in our new order block. And then now price was now bullish now. That's then for the uptrend, right? This is the uptrend, right? Like I used last time. This is the whenever daily is bullish, on the 4 hour and 1 hour, you're looking for a higher low on the order blocks. All these higher lows should be on the order blocks. All of them should be on the order blocks. Okay, actually not on the order blocks. Part 1 is on the order blocks. Then the other stuff I'll teach you later. Right. So in this area here, let's go to our 1 hour and see what price was doing. To July, where is July? July. Okay, here. Okay, yeah, right here. So start from here. Right, so let's see. Right, so we have this example like I used last time, right? Lower low, even this lower high is on the order block again. Lower low, sorry, BMS, lower low, BMS. So now we are bullish. We are now bullish right here. So now let me zoom in a bit. So this is the bullish BMS, this one. So now if we are bullish, we are looking for bullish order blocks, which is the last bearish candle before the BMS in discount. So when we see this BMS, where's the last order block? It's this one. This is the one. Right. So this is the this will be the higher high, and this will be the higher low. This was a higher low, but not on the order block. This was on the, okay, I will not mention it. It's for the next lesson. Right. So here there was no return to order block. You don't need to write return to order block, but there's no return to order block. Then BMS. Once you see the BMS right here, you mark your order block. Where's the last order block? Is this one. This is the one. That's where you're going to expect your higher low. Now, this is the first time I'm going to teach you about lower time frame. Now, how do you know that price is going to respect your order block? How do you know that price is respecting your order block? What you want to see is a 15-minute or 5-minute type 1 or 2 reversal in that order block, inside the order block. So when price comes down here, inside here, right in here, if we go to 15-minute or 5-minute, we should see a type 1 bullish setup or type 2 bullish setup. That is what is going to support your order block. And you are going to buy here on the 5-minute or 15-minute return to order block. So for the entries, we use 15-minute or 5-minute. So now let's go to the lower time frame now and see. So now as you can see, when price is coming back to the order block, look for type 1 or type 2 reversal in the order block. There was a lower low here. There was a lower high here. There was a lower low. There was a BMS. This is the BMS. So we have a type 1 bullish BMS on 5-minute inside the 1-hour order block. So what you do after the BMS, that's like I told you, you mark the order block before BMS. The thing that you look for on higher time frame is the same thing that you look on the lower time frame. Price is fractal. Anything that happens on 1 minute, you see it on 15, 1 hour, 4 hour, monthly. This is our, no. I want this one, yeah. So this is our 5-minute order block. So when price makes a higher high on 5-minute and comes back to do a return to order block on 5-minute, this is where you buy. This is where you're going to buy, right here. You are buying on the 5-minute order block inside a 1-hour order block, inside the discount of our 1-hour market structure. So you buy here, stop loss always below here, below, should be below, here. So let's say if you buy here, this was about 4 pips stop loss. Now, this order block was violated here. They violated it, but still, they were still bullish. They were still bullish. So this is why I recommend that when you buy here and you put your stop loss down here, do not look at the trade. Do not look at the trade every 5 minutes. Why? Because if you had seen this, let's say this setup was 0.1 lot size, 0.1. Well, let me use a bigger one. This was 1 lot. You put 1 lot here. From this buy to this low, it's 5 pips. So you are risking $50. You risk $50 here. Now let's see. Price went to about 4 pips. So price went to about -40 here. And here was your -50. If you were looking at this chart, you'd take out, your emotions would come into place. Then you'd be like, oh my God, I think I'm wrong. Let me get out. Then you get out and you lose $40. The moment you get out, look at what happened. Price went up and did not even touch the stop loss. So sometimes do not move your stop loss, because sometimes price likes to range. They will do this. BMS, this is your order block here. Price comes back to the order block, you buy here, but they are not ready yet to go up. So they'll start to do this, to range. But they will not even touch, your stop loss is here. They won't even touch it. They will come here, then they go up. So if you were looking at the setup and you see all this negative, positive, negative, positive, negative, you'd get out. You get out, because your emotions would be like, I think I'm wrong. Then you get, the moment you get out, boom, they go up. So never look at your trade. Once you buy, for me, what I do is, well, once I buy, I switch to a higher time frame, because on a higher time frame, I'm not going to see all of this. I won't see all of this. But anyway, this was the 5-minute setup, but on 15 minutes, there was another, the setup was different. So on the 15 minutes, this was the lower low, this was the lower high, this was the fail to make a new low, this is the BMS, this was the higher high, this was the higher low, this was the return to order block here, this order block. So for 5 minutes, this was the buy. For 15 minutes, wait, 5-minute buy, 15-minute buy. The only difference was, let me see, what was the difference? The difference was about 5 pips, which is not, it's nothing, to be honest. So for safer entry, you'd have taken this one here. Right. So now that we buy here, so we buy here, price goes up, breaks market structure here, you mark your order block. This is the last order block, this one. That's the last order block. Right. So price makes a new higher high, price comes down. When price comes down into the order block, you go to the lower time frame to look for a type 1 or type 2 reversal. So this is how you know that your order block is going to fail. If the order block has no lower time frame, no lower time frame bullish BMS, then it's going to fail. So here, this is the order block. Now let's look at what happened on lower time frame. Lower low, lower high. Lower low in the order block, lower high. BMS, lower low, still in the order block, lower high. There's no bullish BMS. BMS, and now price goes down past the order block. So once you see this, scratch this order block. It's no longer valid. Let's go, you go back to 1 hour. So 1 hour, this order block failed. Do we have another order block? We have this one here. We have another one down here. Still inside this range, still inside our low and our high. So we had 2 order blocks. The first one failed. How did it fail? Because the lower time frame, there was no bullish BMS. So now let's look for the second order block, which is this one. This one here. Now let's see. Lower low, lower high, lower low, lower high, fail to make a low, break market structure. So now we have our bullish BMS. So now this order block is valid. It's going to hold price. It's going to push price up. And this is the higher high. and this is the higher. This was the entry, but this entry is not on the order block. This is the entry on the mitigation block, which will be for the next lesson. This buy was on the advanced order block, which I'll talk about in the future lesson. And then price goes up, breaks market structure here. And once you see the BMS, mark the order block. This is the order block here. Even if you take your Fibonacci from this low to this high, this order block is in discount. It's in discount. So once price comes back, look for your lower time frame support. So here, as you can see here, let me zoom in a bit. Let me zoom in. Yeah. Price comes down, we have a new lower low here. So now this was a different kind of setup, to be honest, because the swing lows and swing highs here that happened here were all made by the same candles. This is the lower low. This is the lower high. This is the fail to make a new low. And this is the BMS here. So this was a type 2. Type 2. But this type 2 was made by the same candles. These same candles here. So it was different from what we're used to. Then once we see the BMS, mark the order block. Just like even on 1 minute, mark the order block before BMS. This is the order block here. And as you can see, price makes a higher high, comes back to make a higher low. Where? On the order block. So you buy here. This is where you buy. Stop loss below this order block or below this low here. 8 pips, which is okay. Even if you miss this, this was the BMS. Higher high, higher low, BMS. Order block, this one, you would have bought here. If you miss this buy here, you would have bought here. And then price goes up, makes a new higher high. Where's the BMS? This is the BMS. And the last order block is this one. Price goes up, makes a new higher high. There was no higher low on the order block. Price goes up again. We have a new BMS here. So we now have a new range. This is the order block. Order block before BMS. So when price makes a new higher high and comes back to make a higher low, again, go to lower time frame to look for a bullish BMS, which is going to support your, let's see, lower low, lower high, lower low, type 1.2 BMS. Right here. BMS here. So where's our order block? So like I said, right, we used 5 minutes and 15 minutes. Use them both. Do we have any 5-minute order block here before BMS? On 5 minutes, this was the order block before BMS. This is the 5-minute order block before